Welcome, new episode, not the last episode of this year.
We'll do one more.
From the market reporters. And every year we are doing this for 5 years now. At the end of the year, we look back, and in the beginning of the year, we look forward. So now it's time to look back on what happened last year in the world of investing. And every newspaper, every financial paper and magazine is doing it. We are a little bit maybe arrogant, what we are normally not are, because this time we are looking back
at ourselves.
We only look back at our vlogs, and we had a discussion, and we said, okay, let's discuss 3 topics of last year that we discussed in previous vlogs. One, what was the most popular one, and then we both chose one vlog where we wanted to come back on.
Yeah, we want to refer to. Yeah.
So let's begin with, that's very short, the most popular one. It was 5 months ago.
Yeah.
Hopefully you saw it, and we will put a link below to see it back. And it was about, Martin?
Humanoid robots.
Yeah, and the question was,
what is the most promising product that Elon Musk has ever seen? Something like that. No.
Yeah. So we rephrased him, and we were already talking about humanoid robots, and I think we talked about also in a couple of vlogs more. We discussed how you can invest in it, what does it mean, our vision on the humanoid robots, and I think it's after half a year, I think our vision has not been changed. It goes faster than expected. You see daily or weekly mainly Chinese newcomers that also have humanoid robots are getting better and better, and it's better than the market. It's growing. They improve faster than the market thought.
What was the plan again that was launched in the US in the time? It was called Manhattan Plan, some plan Manhattan, the really big plan to produce the atomic bomb. You remember that plan? And they compare it to that. The amount of money also that in the United States is now being invested in AI and AI solutions. It's without precedent. It's like you've never seen something like this before. It's going so quick, and it's not going to be years. It's going to be months. The power of AI. It's scary, but sometimes they even warn that it goes too quick, that they don't think well enough about it. Specifically with a topic like this, as the robots, something that needs to be very carefully monitored, I think.
Yeah, we spoke about it before. We were really early with it, and we had a lot of traction, a lot of questions, and a lot of
Definitely.
Yeah. Okay, that was the most popular one. And then, Martin, which vlog did you choose and why?
I choose the vlog from Porsche. It was a vlog from the 28th of March. Okay. You might think, why you choose the vlog on Porsche? Mm-hmm. Well, a lot of things happened this year, I think, with Europe on itself. Porsche is not the largest European car company, but it's of course part of, you could say, Volkswagen, Porsche.
One of the nicest.
One of the nicest, if you like those cars. I think there's a shift going on. Something is happening in this car industry. We are already seeing much more electrical cars than we saw before. And for Porsche, it was, at the moment when we talked about it, the price was about 46 euros. It's still around that price, and you can't say that the price developed in a certain way. But in general, it was a year of change for Porsche. They've been focusing on growth. They had a lot of difficulties with their electrical SUVs, with the smaller ones, the Taycan and the Macan. Yeah, they are having difficulties to sell those. The batteries were not as good. It was it was a little bit old-fashioned, and mainly the biggest problem with Porsche was the production process. They were really a little bit, we could say, outdated or old-fashioned. So they put a lot of money to streamline the production, rationalize the whole process on how to build those cars. They also invested in the software. Because you may have a software in those cars, and it's used for many different models, to update that, to make that more sophisticated, to make that more nowadays times. And also, of course, they were suffering a lot this year due to the tariffs, and that is not something that they can do a lot about. But what they did is look more geographically, where can we sell our cars the best, which countries are not so much affected by these tariffs, and because the thing with the States is, the United States, they don't have any plan there. So every Porsche that is sold in the US is being made in Germany or made somewhere where they produce, but not in the US. So it was very difficult also for them to avoid those tariffs. And of course, Teslas were less popular. On the other hand, Porsche is a car that you like it, people will still buy it, but of course it is a little bit more expensive due to these tariffs now. We also made a comparison with BYD. BYD was one of the most promising car companies at the beginning of the year. The share price did not do anything else than go down. Since the moment we recorded the vlog, the price went down, mainly because some disappointing sales, 5.5% less than what was expected. The revenue, however, was up 23%, so that is of course good, but they are investing heavily. They sold, I think, 2.something million vehicles this year. It's the largest car selling company in the world. For instance, a country as Australia, the most sold country there is a BYD, the Build to Agree. So they are also in a phase of finding that place. They do a lot of things. You see, they build already more than 10 million cars. 10 million cars. You might think, okay, well, how much is that compared to one of us? Porsche is building 200,000 a year approximately. So you can imagine the magnitude of their, I think, and we also made the comparison with companies like Stellantis, Opel, Peugeot, Renault. They are going to have a really difficult time to compete with companies like BYD that have the ability to transport the cars with their own ships. They're so sophisticated. They do everything themselves. The batteries are really good. The models look nice, and they have a really good market for them, I think, to keep growing over the next couple of years. So with Porsche, this was a year of transition, and the moment we spoke about it, the price earnings were around 12. The Porsche Automobile Holding, what we also showed is they are basically the boss. They own part of Porsche AG and they own part of Volkswagen. They had, at the time we spoke about it, a price earnings of 2. Porsche Automobile Holding did go up. Volkswagen also came back a little bit from about 85 to 100 and 110. So they are slightly on the way back. Porsche, pretty flat from when we recorded the vlog. There are expectations. When you look at the analyst reports in the platform, you can see also that the price will go up in the next coming years. At least the earnings will increase again. They will go back to 4 or 5 euros from 2 something per share. So yeah, let's keep an eye on it. It is something they are focusing from growth more to high margin growth. So that one car is not bringing 5,000, but maybe 20,000 euros of profit. I don't know, just to give you an example. So that is what they're aiming for. Let's see if they manage.
And it's the highest profit margin is the 911.
Yeah.
But yeah, you
don't sell so much of those.
No, you can't say, okay, I'm only going to sell 911s. And I think it's also a little bit the DNA of the company. They're used to high profit margins because of the 911. It's you can't have those high profit margins on an electric Cayenne that just came out. It's impossible. And this week the EU came with a revised plan about 2035, that not all the cars need to be electric. So that is good for Porsche, I think, because a 911 should not be electric, in my opinion.
No, it's not really the same.
You saw it with Ferrari. We spoke about also in the vlog. When they announced an electric Ferrari, the share price dropped by 13%.
Yeah, I think it's logical. It's not something that you want to have electric.
Yeah, because if you pure look at the electric, then the Chinese cars, the high-end Chinese cars, are the same level.
Yeah,
it's a difficult company.
Definitely. You want to talk about your favorite vlog, and that was in this case a commodity.
Yes, we talk about sectors mainly, and we talked about precious metals, we talked about commodities this year, and in June, the 13th of June, we talked about silver. And we analyzed it from different angles. You had a look from a technical perspective. There were no on a midterm clear signs that it would go up or go down. By the way, we both agreed that it was at a really important point, looking at the chart itself, not at the indicator, but the chart itself. We said it's a really, really important point. We agreed on that. Then we looked at it from a fundamental side, and then I think bottom line with investing, it's demand and supply, no? Especially with production companies. And we looked at the total demand of silver, and it was 1,020 million troy ounce on a yearly basis. It's because it's still used a lot in the industry. For example, the biggest one is electronics, 300, solar panels, 190, and then 86 medical and electric cars. So 1,020 million troy ounce was the demand, and the supply part, that's mainly the mining part, that was only 830. So a shortage of 180, 190 around. There is also silver that is recycled, but if you take that out, it's a huge problem. And we also looked at the coming years. It is expected that, bottom line, the total demand will grow with 5 to 10% per year, and the demand only because it takes a while to get more out of mines or to create new mines. So 5 to 10% more demand, only 2 to 3% more supply. Yeah. So the shortage only would go back. But now we both agree. Well, we don't give advice, but our conclusion was if the supply is smaller than the growth of the demand, normally the price can go up. And yes. The price went up. At the moment we discussed it, the price of silver was $36 per troy ounce, 36. It's now trading at around the 65, almost 100% growth since the 13th of June of this year. So I think I hope that you saw that vlog, and we hope, because you also closed off and said, how can you invest in it? ETC's, Exchange Traded Commodities, a really good one with a physical underlying, so they buy the silver and put them somewhere in the safe. That was from Wisdom Tree Silver. Hopefully you bought it, then you had a really good year. And you also talked about and that's really important for the price of silver, how many times gold was always and probably will be more expensive than silver, and there's a ratio. In the old days, hundreds of years ago, it was always gold was around 10 to 20 times more expensive. In the last century, it was a range between 40 and 60, and the moment we spoke about silver, the ratio was, and we highlighted that, was 80.
Yeah.
Normally,
the higher, the cheaper silver. Right?
Yeah. So silver went up, gold also went up a lot, but the ratio went down from 80 to 65 now. Still, 65 is higher than the band of 40 between 60. Yeah. So maybe it's still important. Yeah. So I wanted to highlight that one. Well, it's a really positive one. Really positive, no?
Absolutely.
If you can make 100% in half a year, I think then you are a happy investor.
You're a happy investor, absolutely.
And so that was positive. Porsche is, by the way, when the IPO was, they had an IPO on 110, I believe, no? I came on the market.
Yes.
So they're half the price of the IPO.
The price, yeah.
We discussed the IPO, we said it's too expensive. Remember?
Yeah.
It's too expensive. The figures didn't completely match.
No. It was priced as a luxury car company.
Yeah, so that was the year. Hopefully you had a good and healthy year, and of course you made your money in line with your goals. And within the coming next week, we will look at the next years.
Next year. Absolutely. Thank you for watching as always. We'll be back with a short vlog before the end of the year. And Merry Christmas.
Merry Christmas, and give us your thumb.